Is the crypto rally finally over? Are we going to make new all-time highs? None of these questions matter because our focus is going to be making money in the markets. See, there's a lot of opportunity coming. We don't just need the price to go up. Even as the price goes down, we can do pretty well in the crypto market. Yesterday, as I was preparing for the week, I shared 3 levels, the core levels that my trading will revolve around for this week. I'll explain all of these in detail. And the thing is, if you've been following my content long enough, you know that you don't need to have 1,000 IQ or use anything super complex to carry out the strategies I'm sharing in this video. That's not to say trading is easy, because the market is designed to take money from you, but it does that by playing with your emotions and taking advantage of your poor risk management. Messages I will never stop sharing. The good news is I'm here multiple times a week to give you updates to get you through the emotional and technical side of trading. So put aside 5 minutes, go to 1.5x speed if you need to, and listen to what I'm saying, because I'm going to give you the exact strategies I use, the exact trades I'll be looking for, and a bit of a review of the trades I've recently taken. This is just a rough look at the trades I've recently taken. So I took the breakout above here. So the second we got confirmation, I got in and I took profit on the way up. That was a good breakout trade catch. Then I lost the trade trying to catch this breakout here. I thought I had it, I failed. Then I tried to catch the short breakdown over here. If you take a look, breakdown short here. And I went roughly break even just because I was ready to exit as it came back up. I got a little bit of profit, but let's call it break even. So 1 win, 1 loss, 1 rough break even, and then a decent predictive trade where I took the retest here with invalidation above recent highs and took profit pretty early as we came back down. That's it. Those are all my trades. 3 of the 4 attempts were breakout trades. Then with reduced size, we had this sort of predictive reversal trade, which is a common trade I take. I'll explain that a little bit. Basically, when I see market structure start to shift and something look like a local top, I'll go for this move. So basically, I see bearish signs developing on the way down. And if you take a look, price comes down, makes a low, makes a lower low. So you see market structures forming, comes down here, and then makes a new low there. So you see downtrend has started, then price is coming back up to test this level. So I say, okay, if we hold this level, I've actually put stop loss around there. If we hold this level here and we don't make any sort of highs there, then we've got real confirmation of the market structure shifting. And I took profit pretty early over here. Why? Because the macro bias is bullish and I'm less aggressive with my shorts when the macro bias is bullish. Now let's do our analysis, talk about our trades for the coming week. If you want to trade like I do, you need 3 things. Number 1, you need a TradingView account so you can chart like I do over here. You need somewhere to trade on. I use Phemex, link in the description below. You can get up to $6,000 sign up bonus using it. And finally, you need an understanding of technical analysis. If you struggle with anything I'm talking about in this video, I'll leave a link to my free course that pretty much teaches you everything you need to know about technical analysis. So we always start with the higher time frame chart, and let's clean this up here. Okay, what do we have? Resistance over here. See, this data point changes things a lot because it syncs up with these over here. And then it creates a few like deviations above it. All of these are just deviations above the key resistance level, which is just below. Also very confluent with these previous data points there. We have ourselves a major resistance at 30.6 or 30.7, something like that. So the next level we need to look at that we've been watching for a good while is about 24.5, but really you can pick anywhere between 24 and 25K and you'll have a decent level to play with. Now, why are these levels really important? Well, a break here, this is now a key structural level. We break this and we've got confirmation of further bullish continuation. Take a look at these. It's not the cleanest uptrend, but we come up again and we can definitely see continuation of this uptrend. So that's why that's important. And this level here is the end of this big market structure shift, because once we get below this, the bullish structure is very much invalidated. It may still be leaning towards it, but it won't be a clean uptrend anymore. So what we're seeing happening here is similar to what we saw happen there. See, we get a really aggressive move up and then another aggressive move up. And then we sort of come down and see a much weaker move up. Then price comes down and breaks the previous structural level. So not too dissimilar to that. Right now we're seeing a top form over here, or a high, and then above it we get another push to a new top, but not quite as powerful as this giant previous move here. So you're seeing a slight weakening in the trend. and then price comes down and hits this level there, which structurally is the equivalent of this level here. And we're looking like we might dip below it. And I'd argue that's the most probable scenario here because we can bring another tool into play, and that is candlestick analysis. Remember, we're imagining an army between the bulls and the bears, and the bulls were doing really well here, but here, bears completely decimated the bull army, and they are in control of this battle. The bulls had a pathetic move here, but it didn't really do anything for them. So now they're trying to break through this final frontier over here. And I'll get back to how to trade that, but Confluence is always very useful. Let's bring in some moving averages. So my bias is, as I just said, a bit bearish. Now we've got even more confirmation that the bearish bias might make sense. We've got a bearish moving average crossover here. And when these moving averages cross over, plus the price gets below it, this level here is going to act as a magnet. Price is naturally going to want to return to the average, the mean. So we're seeing a lot of confluent factors lining up that the price is going to go down here. Now see, this is how I form my macro bias. This is why I said yesterday I'm looking for shorts more than I am looking for longs. So I'll also widen this target over here just because this moving average is going to continually travel up, which means if we take short plays and we're looking to take profit, we may not want to wait for it to come all the way back down to 24.5. And a lot of people, sentiment-wise, might be looking to buy at this level because we're not as bullish as we were before, but market sentiment is still pretty good. So let's dive into the 4-hour chart now. On the 4-hour, first thing you'll see with the moving averages is that they have all crossed over. Another reason to favor bearish plays over bullish plays. These are the easiest ways to detect trend, but you get rid of the moving averages and you do get to see this clear downtrend that formed, and we also took that predictive trade, assuming that this downtrend would be formed. So now that we have the 4-hour time frame, we're going to adjust our levels slightly. We're going to lower this resistance here just to about just under 30.5k. And we're going to place our support over here about 27.2k. Again, remember, exact level doesn't matter as long as you're consistent. So we have our key levels. Now, how do we look for trades? Well, first we need to know what setups are available to us. Do we normally trade the trend? Do we wait for a range to form and trade that? Do we scalp intraday? I can only share with you guys what I use. I like to use the higher time frames, a combination of the 1 day, the 4-hour, and say the 1 hour as well. But that's not really necessary. It's just because I have a lot of scalping experience and I enjoy it. So looking at previous trades, we went for the breakout play here and we managed to secure some decent gains. We failed the breakout here as we did get our confirmation signals. It just didn't go any higher. That's totally fine because we cut our losses very quickly, seeing this sharp red candle. Then the next trade we went for was this breakdown trade over here. Again, price came down, looked like it was going to go down further, and we took it and we went about break even on this trade. And then finally, with less size, we took our short here for the market structure shift. Now, the reason I use less size is because I know what systems I do best in, and those are my breakdown systems. So any other systems that isn't that, I'm going to be trading with less size. So now I'm going to look for some plays because we are at a key level. See, normally the best places to look for plays are going to be at these extremities. Extremity 1, extremity 2, extremity 3. The extremities are the easiest to predict. They tend to be the most volatile, so you get the best rewards when you do well. And this level here is going to act very well as well. So this is going to be our key support / resistance that's going to flip and determine which direction we're trading the market in right now. So if we get a breakdown play from here, that is the easiest, most obvious, cleanest play I can see. So from 27k, we're going for the breakdown to hit about 20, probably 25k. I'd be very conservative with this because high time frames were still bullish, even though this move right here is looking quite bearish. Not to mention, I'm looking for long-term buys around this level. So we're going to pay close attention to this. And this is where the 1 hour becomes very useful because I dive in, set my alerts at this level here. Also, I'll be watching this level here, the 27.4k as well, because I can see a lot of significant demand here. So you can see price gets pushed up, price gets pushed up. Once that demand is exhausted, there's nothing left here to push it up. Where's it going to go to next? How much demand is left here? We don't know. I want to watch and see how that reacts. So that is my top choice play. Then we'll also take a look at the upside. For this, it's a little trickier because we've got two resistances here. one at the 27.35 level, and then one here at the 28.7k level. And this is really important for looking for trades, because it's not just what's most likely to happen, it's what's most likely to happen and then give me good returns. Because if we catch a short here, there's barely any price action before we hit this 25k level. That's where most of the resistances are, there and there. But if we're going for the long play, for example, if we bought here at this level, which is technically a support, and we did expect price to bounce here, sure, you get the bounce, but how high does it go? It goes to 27.735 before it starts consolidating sideways, and you don't know whether it's going to break up or down. More stressful, more time consuming, and way less reward for your risk. Same thing again. If we get above this level, we got a bit more distance to go, and this would actually be a very nice day trade. We got 3.29% potential move up here. You can do well on that. Then again, the break up from here, we've got a very soft level here, a very soft level here, both of which could just cause issues for us, and we want to be careful. This is why I don't love the plays to the upside. I absolutely love the plays to the downside here. If you're intraday trading, you could make some decent plays towards the upside. And heck, if you're hyper bullish, you could even make a bet that we're going to go test this previous resistance again. And then this is really important, and I want to draw people's attention to it. Zooming out to the weekly, it's really important to take that higher time frame view, even if it's not a primary thing you're trading. Just helps get your sentiment in line. And what I really don't like is what I'm seeing happening here. I would actually like to see us recover this quite quickly, because struggling at the 236 level is not a good sign at all. So 236 level here, if we bring our moving averages in, this doesn't look too far off. A retest close to the 100-week moving average, then us coming back down. Even if we go back up, we're testing resistance that is the 100-week moving average on top of this price action over here, showing a support level there. And then our next one's about 36k, which syncs up with the 382. It's a long road up, and bias fluctuates a lot because, well, we've got the 1 day here, and we can take a look at market structure. The stronger the market structure looks for the bulls, the more likely we are to continue up and break these different resistances, stay above the 236, get to the 382. But yeah, what I'd most like to see, and what I think is most probable, price down to 25k over here, big bounce afterwards, and we start making moves up. That is everything from me.